Hello and welcome to TA for Traders. It's Friday the 6th of October. I'm Nigel Croft. In this video we're going to look at the sentiment and money flows that's happened in the markets over this week and what we expect going forward. We're going to do that looking at charts and deciding on the technicals where they're going to move. Let's look at those charts. Okay, so starting with the US 30-year Treasury interest rates, this week we've seen a further move up. The key figures, economic figures, are coming out today. Non-farm payrolls, they're expected to have been affected by Hurricane Harvey and Irma, but the expectation is that there's going to be an increase in interest rates imminently from the Fed, and rates have shifted higher this week. On the chart you can see we're approaching the 200-day moving average. This is a daily chart, by the way. So we're approaching that 200-day. That might cause some consolidation, but momentum is to the upside. In Europe, here we're looking at the German 30-year yield. Again, it's moved higher over the week. Had the flag and it's broken up. You can see the 20-day is given the push up, and again that there's positive momentum. So it does look like that's going to move higher as well. On the UK, obviously this week there was the Conservative conference, which was seen not to go too well, and today there seems to be a group of MPs trying to get rid of Theresa May. This is the gilt price, so it's an inversion of the yield, but you can see we're moving to new lows on the gilt, which is obviously high yields. Mark Carney during the week did advise that he does expect an imminent rise in interest rates, so that's been reflected in the gilt prices. Gilts have fallen, higher interest rates, and it looks like they're going to go, the gilts are going to go lower, so interest rates in the markets are going to go higher. You can see that all the moving averages are now moving down. 200 is just about to roll, but we did have a bearish cross on the 20 and the 50 last week. Last week in this sentiment video, I did say there's perhaps a non-confirmation on the chart and maybe a short-term bounce. Well, there was a short-term bounce, but it didn't last very long. This could be a bottoming picture on the RSI, but be wary. We are continuing to get this picture of lower lows, which is negative. So it's looking unlikely we're going to bottom. This RSI looks like it might go lower, but be aware. There is a chance again of a short-term bounce. Okay, equities. The US markets have moved to new highs every single day this week. That's helped the European and the Asian markets. Here we're looking at the S&P. I know yesterday in the video I put Bollinger Bands on and I was suggesting we were touching the upper Bollinger. We'd hit it for 3 days. Well, we'll now hit it for 4 days. But I would expect 4 or 5 days at most. Like, if you remember from the video, if you go back and look at it, you can see that the Bollinger hit there, and then there was a consolidation. So a consolidation is expected. Also, a viewer of the videos has pointed out this volume, which I didn't mention in the videos, that we are rising on lower volume, which is a slight concern. But the positive momentum is there. So expect a consolidation, but it still does look okay. Europe has followed America higher. Here we've got the Eurostoxx 50, and it looks good. We had a golden cross a few weeks ago in the 20, crossing the 50. Having a bit of a consolidation here, and likewise it is on low volume, so be aware of that. And even the FTSE which was looking slightly vulnerable. I did a video on the FTSE a couple of weeks ago. I'd ask you to look at that again. I wasn't negative, but mainly I think I mentioned in the video it was because of what was happening in the States that they looked so good, and I expected further upside there, and I expected support to come in from there. That did happen. It's taken us back above the 200-day moving average. We've now had a golden cross on the 20 crossing the 200, and we'll get one next week when the 20 crosses the 50. We're perhaps in the short term getting overextended away from the moving averages, so perhaps there's consolidation, and again it's low volume. You can see I've drawn this downtrend on the chart. We have broken above there, which is good. Let there be a consolidation, let these moving averages catch up a bit, but we have got, as you can see from the RSI and the MACD, good solid upside momentum. On currencies, the dollar has again moved higher, expectation of higher interest rates, and this is the dollar index, and you can see it's got solid momentum. We're about to get a cross on the 20 crossing the 50. Again, slightly maybe overextended away from the moving averages, and just at the top of a downtrend, so some consolidation may be expected, but the dollar does look good. The pound, however, has been pummeled this week. Theresa May coughing her way through the conference didn't inspire anybody with any confidence, and it hit the pound. And obviously next week they're starting Brexit negotiations again. There's continual bearish stories coming out of the negotiations regarding what we want and what what the UK government wants and what Europe wants, and this is affecting the pound. You can see that we're back to the support of the still rising 50-day moving average, and the RSI is down at 38.54. Maybe at a level to get a short-term bounce, but the momentum is negative. Likewise on the euro, here we've got the euro against GBP, and you can see the euro strength as the pound has been hit heavily this week. But again, it's had such a good run here, the euro, that the downtrend in 50-day might just hold the rise or the decline in the pound. And moving on to commodities, gold has moved down again. I did a video on gold last week and I was reasonably bearish. It has continued down. At the moment you can't see this negative momentum. It is falling on low volumes. That's the only redeeming factor, and the fact we're coming back to support, but still looks like further downside. Here we've got platinum. I've shown you this chart. You know, there has been a bounce, a short-term bounce. So not all the commodities are going down. It did get oversold, I mean very oversold, so that the bounce is not unexpected there. And finally, on the oil price, I've done a video today on Brent. This is a chart of WTI. You can see it's come back to the support of the 20-day moving average. Momentum is slightly negative. If you look at the weekly, I'll just change this to weekly. You can see that we're at the upper boundary of this trading range, and that needs to be broken for any significant upside. On the WTI, we did break through the upper boundary last week, but closed below it, and then had a bearish doji. Please look at the video for the full clarification of that. But here on the WTI, we never broke above, so that is still a significant resistance level up to 55, and we're just drifting back down towards the moving averages. So that's been TA for traders, just clarifying all the markets, looking at sentiment and looking at the money flows. I hope you found the video of interest. I just do this video on a Friday just to go through a few charts and just to look what's happening in the general markets. I hope you found the video of interest. If you're not a subscriber to my YouTube channel, please do subscribe. You then get email updates when I come out with new videos. I cover the foreign currency markets, commodity markets, equity indices, and I also come out with videos on single stocks in the UK and the US. All the videos I do are my opinions and they're not meant as an investment recommendation.